think the jury's out on exactly where the market's going this year. I think there are two schools of thought: a worsening property market where house price growth is going to slow down to probably below inflation, and where, in line with current economic weakness, the market deteriorates. The converse is that there is sufficient supply and demand, significant pent-up demand still within the South African property market, that in fact housing demand is going to continue to be there, and as a consequence activity in the housing market is going to continue to be strong in spite of the current economic trends. As far as interest rates are concerned, while there has been a predictable increase, there's no doubt that we're still way off the levels that the South African market was able to easily withstand in decades ago. So at levels of 15 or 16%, the market was still able to function reasonably well. So my sense is that we're not anywhere near a 2007-2008 scenario. On the balance of probability, I think we are being more cautious than optimistic. That the market is going to be more difficult, but not necessarily aggressively so. We just think that there's going to be probably a slightly tougher, slightly tighter market all around, but all things considered, for the next 12 months, not necessarily a terrible year. What we're seeing right now in February 2016 is almost two separate markets. You've got a Cape Town or Western Cape market that's characterized by a shortage of stock, an oversupply of buyers, to some extent decent house price growth and property price appreciation. Whereas in other parts of the country, you're starting to see stock come in much more readily, some buyer resistance, and to some extent the opposite market. And we've started to see that over the last couple of months. And our expectation is that that trend is going to continue in other parts of the country, whereas in the Western Cape, it seems like, certainly for now, that that buoyancy that we've seen in the market is set to continue.